Like let me show you that. So here the provider and receiver is the controls will come into the picture. The provider organization is who is the spending the money, the provider who is bearing the cost. Who is the receiver? The owner of the project. So whenever a transaction happens between these two, that means a cross charge is an act of entering the transaction where the expenditure organization and the task owning organization are different. So a person sitting from Hyderabad will be booking the cost to the US project. And most of the projects are like that only, right? So the projects are from US and the persons are from maybe in the Tech Mahindra or maybe in the Infosys or maybe in your city group also. The projects will be operating from US, but so many people will be connecting from India. Now you are going to work on the project. You are going to fill your time cards. You are going to get your salary. Like the provider will be here, the Chennai operating unit. The receiver is here, the US operating unit.
Okay.
Like that, the cross check happens. Like we'll see, like what are the different methods are there and how it looks like and all. These are the different kinds of terminologies. Let me. A small concept again. Most of the companies will use this. So yeah, if you see, these are the different cross-charge types. So business group will be the United States, legal entity will be the US service and US corporation. Under US, you have a Dallas and Denver, and under US corporation, New York is the one. These are the operating units. Now, if any transaction happen between the legal entities, that is going to call as an intercompany.
Okay. Two legal entities, two operating units.
Yeah, two legal entities mainly. If you see, this is from one legal entity, right? Obviously, this particular line.
Okay, I thought intra-operating. Okay.
Yeah. So within the organization, sorry.
Yeah, in the same legal entities, if like in the same operating unit, it would be intra-company, right?
Absolutely, intra-operating unit.
Okay.
Within the legal entity, between the operating units, that is an inter-operating unit.
Okay.
These are the different levels of the cross-charge types. Okay. Now, these are the different kinds of processing methods. The processing methods are nothing but how the system will calculate the journal entries, or maybe what is the method it will follow. Whenever we say borrowed and lent accounting, mainly it talks about your with the help of accounting entries itself, the cost and revenue will be distributed between the provider and receiver. It will simply create the accounting entries. It won't create any further invoices and all. So whenever we talked about the borrowed and lent accounting, mainly it's talks, the types it supports for inter-operating unit and intra-operating unit. That means within the legal entity, you can go with the borrowed and lent accounting. Intercompany billing. This one you can deal with the inter-operating unit and intercompany between the legal entities and within the legal entity across the operating units. And no additional processing. So with this company, inter-operating unit and cross charges. Okay, no, if you don't want to go with any uh, like cross charge processing, like all these things, it will allow. So for intercompany, you don't want to process. For intra-operating unit, you don't want to process anything. For intercompany, you don't want to processing anything. You can just simply choose none. Furtherly, it will not create any extra cost for it. Now, intercompany billing mainly talks about the invoice generation. So provider will be generating the AR invoice, and that will be sent as a AP invoice to the receiver. Receiver will pay the money, and that will be nothing but your amount to your in the receipt.
Okay.
Yeah. So that is the here mainly the invoice concept will come into the picture. Here only with the help of accounting, the cost and revenue between the provider and receiver will be balancing. I mean will be accounted, and none in the sense no cross charge was nothing. Yeah. So that is one thing. We'll just see that. Now, US service, we have within the legal entity, we have two operating units, Denver and Dallas. Now, the Denver will be here act as a provider, and the Dallas will be the receiver, who owns the project and who owns the resource. Provider is nothing but who owns the resource. Receiver is nothing but who owns the project. Yeah. Coming to the cross-charge task and project setup. So you have to explicitly enable the cross-charge enablement, then only you can able to enter the cross-charge from the like provider end. That means in the receiver project and task will be there, right? At the project and task level options, we have a separate checkbox called, a separate window called cross-charge. So by going to that, you have to enable that particular checkboxes so that from the provider end, you can see the project and task to enter to book your cost. Otherwise, you can't see from the other operating unit. This is how the normal execution will happen. We are going to enter the cost, the cross charge. Obviously, it's nothing but an expenditure. At the second level, we are going to run the program called distribute labor cost or distribute usage or miscellaneous cost. And the third level, we have to run an extra program here. This is the specific to the cross charge. Distribute borrowed and lent amounts. 1 minute, this guy is calling. Babu. Babu. సరే సరే తమ్ముడు అయితే ఇంకా ఏం పని అవ్వలేదా ఇంకా పని అవ్వలేదా ఇంకా పని అవ్వలేదా అంట సరే సరే తమ్ముడు నో ప్రాబ్లం నో ప్రాబ్లం నేను ఆ వీడియోస్ రికార్డింగ్ చేస్తానులే పంపిస్తాలే ఉన్నాయి పంపిస్తానులే తమ్ముడు ఓకే యా యా బాయ్ yeah so this is the cross charge accounting events is the separate program for it, and PRC create accounting the same thing, and after that PRC transfer journal entries to GL. It's a normal process again. Only exclusively we are going to run two steps extra here: distribute borrowed and lent amounts, generate cross charge accounting events. So these are the like the sequence of programs which we need to run. Now come to this. This is how the borrowed and lent like accounting will happen. Usually the labor cost, whenever you do the normal transaction, the labor expenses to the labor cost clearing, it will happen. Now lent account debit to the borrowed account credit. Usually the Oracle applications, the Oracle projects will hit whenever you choose the borrowed and lent accounting.
Lent kind of we have given the service to
Yeah,
target company.
correct.
Okay.
And we can perform some adjustments, it's fine. Now I mean what would be the usually the cross charge adjustments? I mean we can skip for this one. You just try to understand this concept. This is huh.
1 minute. Those projects, I mean those companies where the project accounting they are not following, they are also doing intercompany transaction, but they
Yes,
do the simple entry only, intercompany entries. Why
correct.
this comes into this picture?
No, usually I mean the companies who do not having this particular project accounting implementation, you have a intercompany billing, right? In the AR side, AR
Hmm.
and AP side and GL side. With the help of those functionality, they'll be doing this. This is specific to a project intercompany mainly.
Okay, like with
For
more
their
functional.
yeah, yeah, more granular level, You can generate your invoices, and you can see the cross charge entries across the projects, at the project number level. Whenever we talk about the outside out Oracle project accounting, the intercompany will be maintaining between the AP and AR and GL, right? Not with the
Hmm.
projects. That was the seeded functionality. This is specific to the project, because
Okay.
the resources will be booking the cost like across the projects from the different operating units or different legal entities. That's the case. So still you have a functionality, but not related to the projects. Outside within the financials, you can do the intercompany billing, and mainly the intercompany billing only, no other things.
Okay.
Yeah. If you see here, the provider and receiver, two buckets are there. Now, provider is having a resource. That resource will be working for a project of a receiver. Receiver project he'll be working. And say, for example, whenever I'm sending you the resource, okay, I'm bearing 100 rupees extra. Say, for example, whenever, have you ever traveled to somewhere, maybe within India or outside India, JK?
Some company aside? No.
Okay. Maybe like, if you see the within your city group, so some people will be coming from the other places to Chennai, right?
Yeah.
Or maybe you'll be traveling there. So you'll be getting your regular salary. That's fine. But whenever you're traveling to some other place, company need to take care of your accommodation, okay, and your per diem, your travel tickets, and everything, right? So it's nothing but
Yes.
a extra. That's fine. I'm ready to bear it. But end of the day, my resource working for your project, what is the extra amount you are going to give it to me? That
Mm,
means obviously, like my rate is 100. I need 20% extra on the labor resources, and maybe 15% extra on the non-labor resources. Whenever we say non-labor resources, which are not a labor, like your machinery and other expenditure types you have, right? So that particular one we are going to call as a non-labor resources. So the labor related, I'll have my own rate. For non-labor related, I'll have my own rate. That is, I'm going to get from the provider, receiver, because I'm providing my resource to your project, right? Obviously I need extra. I want to charge extra. That is nothing but your transfer price. The whole story talks about the transfer price. That means within the transfer price, being a provider, you have your own structure. My labor resources, if you want to utilize my labor resources, I need, for every 100 rupees, 20 rupees extra. For non-labor resources, for every 100 rupees, 15% extra. Like that, you are going to set the instructions.
So from the transfer
Obviously,
price going to the both the side provider and receiver, or it's by mistake.
absolutely. No, no, no. Both the provider and receiver. Receiver has to pay based on the transfer price rule to the provider.
No, no, but from the transfer price, the money
Hmm.
is going to both side, provider also and receiver side also. If you see,
Uh, like Still I'm not understanding both the sides, in the sense like, here I'm the provider, right? So I'm a
no,
provider. I'm going to pay. Sorry, okay, let me simplify it. You are going to
no,
work.
no.
Go on.
See, from the provider field, our resource is going to work with Blue Project. Blue Project is a receiver.
Correct.
Receiver should pay the price to the provider, right? So the arrow symbol
Absolutely.
should go from the receiver to transfer price to provider, right? Arrow symbol,
No, 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 no,
arrow.
no, no. Here, no, no, no. Here, this particular one talks about the borrowed and lent accounting. Only the accounting entries. Based on that amounts, it won't flow actually. The cash flow, it won't happen here. Based on
Oh,
that price, the accounting entries will happen. That's where here the debits and credits into the picture. That's where the borrowed and lent amount talks about. Whenever the actual money flows happen between the intercompany, the method called intercompany, where the actual invoice will get generated. That means provider will get generated the AR invoice that will flow to the AP invoice as a receiver side. He'll be doing the payment. Payment tracking will happen, and that will be converted as a receipt. Receipt tracking will happen. and subsequently the amount will be adjusted accordingly between the provider and receiver, because those are within the company only, right? Within the business group, both the legal entities. It's not necessarily to process the money, the cash transaction. The invoice concepts also, like, it talks about the money only in reality.
Okay.
So coming to this particular rule, it's purely the borrowed and lent part, only the accounting entries part. With the help of accounting entries, okay, provider side I'll be hitting this, and receiver side I'm going to debit the receiver and credit the provider, like just something like that based on this particular accounting structure, like this. The lend account will be debited and credit borrowed account will be credited in my books, so that my actual rate is 500 for that labor resources. Based on my cross charge price, I'm going to charge 2,000. Your books will be adjusted accordingly. That's where the borrowed and lent talks about. Understand? No?
Yeah, okay.
And see, if you see this now, being a provider, I have my own rules. For labor resources, cost plus 50% extra. For non-labor resources, cost plus 25% extra. Based on this, you are going to provide your services to the receiver, and accordingly, you will pass your journals. That's all.
Okay.
Your borrowed and lent job is done. And yeah, like this is fine. And we have an implementation options, like we are going to talk that now, like set default processing method and transfer price currency conversion options. And the cross charge within the operating unit is none. Cross charge within the cross charge to the operating units within the same legal entity, whether you allow or not, it's fine. I'll show you that. And the provider and receiver controls we are going to set here, like we are going to set the combinations. It does not like it's not a wide open for uh, for every legal entities or for every operating units. So we are going to set the provider and receiver controls, like what is the borrowed account and what is the lent account it talks about. And yeah, let's see like how the system looks like now, the cross. Kalaka.
Venkat, can we have small session only today? I have to go to office early actually today.
Yeah, sure,
For a-
buddy. I'll just complete this and I will wind up. Okay. It won't take much time. Okay. I'll just quickly cover the setups part.
So in
What
Infosys, you
happened?
generally do work from home, huh?
No. I used to go to the office from afternoon 2 to 11.
Oh, is it?
No, they
Because
won't entertain the complete work from home. That's the problem.
I was working in Infosys, in my project, I was doing almost 1 year work from home.
Is it Infosys Bay?
Yes, yes.
In which branch? I mean, in which city you work?
Chennai, Chennai only.
Chennai
M,
only. Okay.
M city.
No. My manager is won't allow me hardly 1 or maybe 1 or 2 days are fine, and
Oh,
we have a 9.15 hours session, right? The
oh,
useless. Yeah.
maybe
Yeah. This
depend
one
on.
talk. Yeah.
Yeah.
Yeah. Here this talks about, I mean, expenditure, the currency, the cross currency. Okay. If any
Mhm.
cross currency, what is the rate type I should refer? And expenditure item date or a period and month and date, and the cross charge within the operating unit. Okay. Cross charge within the operating unit, you have a borrowed and lent and none only, right? You don't have any intercompany.
Okay.
And allow cross charges to all the operating units within the legal entity again. So this is talks about the inter operating unit. For the inter operating unit, you want to go with none or a borrowed and lent. However, the intercompany billing will talk about the at the time of this one. Uh, Sorry, what is that? Yeah, at the time of the billing module, we'll just talk about this. In the cross chart, it's only talks about the borrowed and whether you want to go with borrowed and lent or not. Just choose okay, okay. This is one-time setup. You are not going to do that frequently. And after this, the main important thing is this one. Where do you stay in Chennai?
I stay in Sholing and Nallur.
Rolling Nellore. Okay, okay, okay. It's out city outskirts, right? Usually.
Yes.
Yeah,
From the like
I was.
almost
Yeah.
25 kilometers from main cities.
Okay. Don't you feel hard to stay in Chennai being from North India, guy?
No, no, no. This area is actually well developed from last 2 years. So many
Oh, okay.
malls, so many shops, so many like all North Indians are here. More than South
Okay.
Indians, North Indians are staying here.
Okay, okay, okay. So your office is nearby, is it walkable?
No, no, not walkable. It's a half an hour on bike, like 12
By
kilometers from here. Yeah.
okay, okay, okay. I used to go in the local train, and my office
Oh,
was in Nungambakam previously.
oh,
There is a company
uh,
called Caritar, Keen India.
okay.
Queens Road used to. I was staying in near to Gummadpundi. There is a place called Tiruvattur something, Tiruvattiur something.
Yes, Tiruvattur. Yeah.
Yeah, I was staying there, and it was taking around 1 hour every day, one way. It was
But
hard, man.
that area is not fully developed actually. That is typical Chennai where you don't feel good actually.
Oh my God.
You
You
stay
can't even.
somewhere is developed, more developed. No, you won't feel like Chennai is very bad. Chennai is very good at. I mean, I got opportunity to go Hyderabad also for
Hmm.
Deloitte and Oracle and Bangalore also from the ENY, but
Hmm.
I
Hmm.
didn't
Hmm.
like.
Oh, okay. Hey, good man. I mean, you got. I mean, you are getting a good options. ENY is a good option. You can consider that going forward.
But the like 2 years back they were not giving good package, so that's why I
Okay.
reject.
Okay. Okay. ENY, it's a good one actually. I mean, whenever you get going forward, like I mean, just opt it. It's a good one.
Yeah, yeah. Yes.
Yeah. Transfer price rules. We'll just cover this one. Let me take PA1 labor. I'm going to talk about the labor here, and
This
whether
rule
what kind. Hmm?
meant for service and provider rules only, right?
Yeah, 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 yeah. The percentages, 50%, 25%, the rules we are going to set, right?
Okay.
Those are the things. On the labor related, just choose this one, and I'm going to incur 150%. There are some other complexities are also there. You can define your own burden schedule, and this one talks about the bill rates, mainly the billing module. We'll discuss at the billing side. Mainly, yeah, these are the things. I mean, on the basis of the raw cost, you can just 150% extra. Whatever the
Okay.
raw cost I'm incurring, I'm going to charge 150% on the labor side. In the
Mm-hmm.
similar side, let's not much complex. This one very simple logics.
Mm-hmm.
The 155%. Let's these two with the help of these two. Okay, let me try to give the dates. Otherwise, it will not. With the help of these two, we are going to define the transfer price schedule. Here already the schedule is there, okay, which we are going to enable at the project and task level. We are going to prepare the schedule like this, okay. Just now come here. What happened to this? Yeah. So already Vision Services is our provider, right?
Mm-hmm.
And here, like I mean, we can just let me try to fill this, okay.
The rule which you defined just now.
Yeah, we are just going to assign it here. What is the labor rule? PA1 50% extra. And what is the non-labor rule? PA1 non-labor rule extra.
But it didn't come plus 50. You didn't give in the plus 50, one. No, 50%. Is it
No,
right?
no, I did not give the name actually.
Okay,
Flex, it's a
okay.
name. It's a purely the name.
Yeah,
Yeah. Just after this, I'm going to. This is a one. I mean, transfer TP schedule we used to call. Okay, transfer price schedule. This
yeah. Mm-hmm.
schedule we are going to attach at the project and task. That's how we are connecting with the project and task. Now we can set the provider and receiver controls also. It's a one-time setup. So from the vision operations, vision services, okay, these are the provider controls. Now I am the provider, okay, vision services. Who are the receivers? I can pass my services. It's not like wide open. Say for example, being in India, I don't want to share with Pakistan. I don't
Okay.
want to share with China. Only US and Canada and Russia. These are my friendly countries. I'm going to share my resources. I'm going to send my resources to work on their projects. Like
Okay.
that, we can set up the control here. Coming to the intercompany billing, it's a kind of billing module thing. I'll tell you like at the time of the billing module what to set up and all here. For now, only just focus on the none and borrowed and lent.
Okay.
Okay, like that we are going to enable this particular cross charge and just select accordingly the borrowed and or none method. And if it is intercompany billing, you have to again give the intercompany billing project number and the invoice group, blah, blah, blah. These are the required setups. I'll give you the complete documentation. I'll give you the explanation on that particular time. But coming to the cross charge borrowed and lent one, just make sure it's allowed here actually, the vision services R&D. Now, we'll just create one project. Okay. Uh, uh, like we'll try to prepare some expenditures and we'll see how it goes.
Okay.
Okay, let me try to. This is the provider, right? Anyhow, it's fine. Let me try to. We have it already created the project, right? It's fine. Let me try to enable the cross charge. Maybe yesterday we created one project, right? On 4th February. Yeah. This is for burdening. Do you have any other project number? 20th
PA1 percentage
PA.
PA. Percentage PA.
Let me try to. Yeah. Let me check. Anyhow, this is a normal project. We can just wind up in 10 minutes. It won't take much time. See, here there is no cross charge. Oh my, this is the other one. Just give me a minute. Let me try to. Yeah,
Here
this
it
is
is.
the. Yeah, here you can just enable this.
So at the time of template, you must be you have
It's a
not
good
selected
option
this.
usually. Yeah, at the time of template, we did not enable this. Even most of the real-time cases, we are going to enable at the template level. This will get defaulted. You no need to worry every time.
Oh,
Just make sure the labor and non-labor both got enabled. And the same thing we have to do at the task level also. I'll just enable only for one task. I don't want to enable for the other one. Jackie, are you able to hear me, right?
yes, yes.
I think some noise was coming. Anyhow, it's fine. Now let me try to log in. Okay, with the other responsibility. That's where here this is the receiver, right? Receiver side,
Mm.
the TV schedule we enabled. Now, being a provider, I'll just enter the transactions with the provider login. I'm the employee now. I will work for this particular project. A. Sanders, welcome. This is my employee login. My name is Austin Sanders. Now I'll be working for that particular project. I'll book my cost using my with my credentials.
So you are working for the provider company?
Yes, absolutely. Now who is my provider now here? Vision Services R&D.
You are
The
providing
project
service to Vision Operations, right?
apps Vision Services only. Vision Services.
Okay.
This is the R&D extra. I mean the R&D. There is another operating unit which is nothing but a provider here. Let me try to see whether the periods are open or not. Okay. We'll just wind up in 5 minutes. It won't take much time.
So basically, provider companies should fix the rate and all, right? We are going to charge
Ah,
50% and all these.
whatever the rate I shared you, that is a global rate actually. Like let me show you that. Yeah, I got your point. Yeah, I got your point. So being the provider, I should like select the rate, right?
Yes, yes.
That is a common rate actually across the this particular instance.
Yeah.
Where February. Open. Yeah, that's fine. Yeah, this is open. Now let me try to enter the pre-approved expenditure batch. PA1 batch E 2020 time cards. Sanders Austin ASTIN. Austin Sanders is my name. Yeah, this is my employee ID because I belongs to the R&D department. What's our project? 25 Jan, right? What's our task? Only one is coming. Why it's not the other one is not coming? Because of we did not enable that, the cross charge.
Okay.
Whichever you enable, only that will come here. The same thing in administrative work, 10 hours. The same procedure, no change. Distribute labor cost.
Don't you need to submit cross charge distribution?
Then after this, it's a normal procedure, right? First of all, we have to run the normal program. If you see the sequence,
Okay, okay.
enter and import the cost, distribute. After that, distribute borrowed and lent. Now, yeah, it's processed. After that, distribute borrowed and lent. This is the exclusive program for borrowed and lent. Okay, what will be the usual cost? Let me try to show you. Oh, shit. So, okay, so, hey, it got hanged now. Just would like to show you what is the normal cost and what is the extra cross charge amount the system calculates. Just would like to show you that. That's coming up. So still you people are recruiting some senior positions?
Yes, yes. So many
Okay.
members.
Okay.
If you want, I can place your resume on my portal. Like there are so many
Okay.
options actually.
Okay.
But
How about
and
the work from
hmm?
home option or connecting from Hyderabad office? It's no option, such option, is it?
No, no option at all. It's a banking company. No, that's why very
Okay.
restricted.
Yeah. Got you. Got you.
Hardly you can take the work from home, and there is no option for connecting from Hyderabad.
Oh my God.
Yeah, but it is giving good package.
Okay. Okay. Now I'm I'm having the 20 plus now, buddy. Don't know whether they'll give me.
Yeah, they will give. I have seen multiple like when the first time in city, no,
Hmm.
uh, I mean first day in city, I in my desk only they kept the form which generally
Okay.
filled by the employees, right? They were
Okay.
mentioning the position and the package. So by mistake, yeah, I got
Okay.
that form. So
Okay.
35 lakhs, 40 lakhs, 45 lakhs, vice
Oh
president,
my
senior vice.
God.
Yeah, so
Yeah,
many
yeah.
person.
35, 40.
Yeah,
Oh,
AVP, VP, if they are having 15 years experience, 20 years experience, vice president, assistant vice president, 35 lakhs,
gosh.
30 lakhs, like this they are giving.
Oh my God.
How many years of experience you have, Venkat?
15 total. Actually, as in the accountancy firm, I worked for 4 years in the CA firm. After that, I switched to the IT. In the IT, 12 years. 12 plus is going on now. Total, yeah, total 16.
Okay, okay. Then you must be having vice president in city.
Oh my God. I want to go with still the SME side. I mean, I don't want to go in the not in the management role. I mean to say.
But the headache is very high actually. The
True,
roles and
true,
this.
true, true. I'll just show you quickly that. Oh shit! I should not come to this. I should log into that employee login. Okay, quickly cover this. It won't take much time.
From the employee login only, you have booked the cost, right?
Yes, that we will see now. What is the cost now before running the our cross charge? We'll just see PA batch when something we entered. Let me show you that. Yeah, this is the cost 300. We entered 30. Okay, I mean 10 hours per hour billing is 30. So 300 came into the picture. Now we'll just run the borrowed and lent one. So 50% extra, right? 450 should come. Yeah, batch name is PA batch one. Yeah, see.
Okay.
After this, again, the same routine story. Generate cost accounting events, borrowed and lent accounting events.
Mhm.
PRC, cross charge accounting events, and the normal procedure. It will go and sit in the GA in the form of accounting entries. That's all.
Okay.
So it's a normal procedure. Like, I mean, intercompany billing is there, and if you don't want to go with, you can choose none. You can simply book the cost, but no transfer price based on the transfer price. Whatever the cost you are incurring, with that cost itself, it will go. If you don't want to incur any cross charge. If you want to go with the cross charge, transfer price schedule will come here in between based on the rates which you are mentioning out there. Accordingly, the price will get picked up. The accounting entries or maybe the invoices will get generated, or maybe the accounting entries will get created based on your TP schedule. Right?
Okay.
The same thing you can find in your labs. Just follow the labs, you'll get the concept by referring to this
Yeah.
video. Yeah.
Sure, sure.
Yeah, from
I,
tomorrow we'll just sit on the integrations, guys. The integration, with this integration, we are going to the complete the whole cycle from the I procurement to till the FA capitalization.
Okay.